All right, welcome back. It is the Dividend Dudes. We got Brian, Tom, and myself, the dude behind the camera here. Hey, we have another portfolio update for you. This is month 25, and you can see on your screen current investment income and earnings. You wanna walk us through what that is?
Yeah, sure. At the moment, we're looking at $128 a month in dividends that we receive for doing nothing, which isn't bad for 25 months worth of investing.
Hey, I logged in. I checked my email once this month.
Well, we do have to do all the research and buy stocks.
Yeah, and send the email links at 3 o'clock in the morning while nobody wants to read what I'm reading.
In the thread, right? The rant thread.
The rant thread, yes.
Infamous
So I think
rant
it's good to
thread.
point out here that this was originally based on a $400 a month investment portfolio. Like we're doing 400 additional each month. Is that correct?
Yep, and that was based on the US Census. What they said was the average leftover household disposable income every month. So we started with that. We didn't really stick to it too good, but in the meantime, these are the positions that we have in our portfolio. If you'll notice something, almost everything is making us money. That's kind of why you invest. You want to have the companies make you money, right?
Right.
Now, I want to point out in this portfolio, those numbers are only on the cost basis of the stock. So these are gains excluding dividends. These are not including the dividend reinvestments because we're not reinvesting the dividends into the same stock that we purchased. We buy another stock. So in this portfolio, we have a challenge in that we have to leverage out each stock against the other one. So we don't want to have one that where we've got $10,000 in one stock and then $500 in another stock. So in this month's portfolio, we had a bit of a struggle trying to find which stock to buy because of the ones in this portfolio. If you look, everything's making us money. So trying to find one that's not making us money, and that's Pfizer right now, is heavily overweight in the portfolio, so we couldn't buy them. So we went to our viewer recommendations, thank you everybody, and we put them on the spreadsheet here to determine what we were going to buy. So on the spreadsheet, we have all the stocks that people recommended. Some of these are our own recommendations, and we went into the nitty-gritty details. Now, there's a few things that people should know about the spreadsheet. This spreadsheet is a guide. This is not gospel, and we're going to explain that in just a second.
Okay, so on this spreadsheet, we have a variety of different companies, several of which were recommended by you watching. One of them of note that we've actually had for a while is Anali Capital. And this one was interesting because as I was looking through these numbers, I saw the yield on that was almost 14%. And so the immediate question was, well, okay, if it's 14%, what's going on with that one? Why aren't we doing more of that one? I felt like it was good to use that as an example of why the numbers just on this spreadsheet aren't telling the whole story. So you want to expand on that a bit?
Well, first, it's an REIT, which plays by a little different rules than a regular common stock. So they have to give a dividend. It's part of government regulation. Unless, of course, they're not making money. If they're not making money, they can't afford to give a dividend.
That's the clincher. So if you want an explanation, it's like, well, God, they're paying a huge dividend. They call those a dividend trap sometimes. So you don't want to buy the trap. The reason why we have the Anali Capital on the list, first of all, is that they're a real estate investment trust. We've been looking at REITs for like a year now.
Probably longer.
We've been trying to get into this market. We just can't find a good price point to jump in, or in this case, in LA Capital's case, a good profit point for them to get in. So one of the reasons why I want to tell people that this is a guide, not gospel, is because when you look at the spreadsheet and you look at Anali Capital, everything looks okay. Like, oh, their net income is up, the quarterly percentages are up, but that's not actually the full story. When you actually go to the stock and you look at what's really happening with this company and you dig into the numbers, you're seeing a whole different story. This is an LA Capital here in our Charles Schwab account, and you've got the cash flow statement pulled up here. And this is their cash from their operating activities. So what that means is they're doing business, and this is how much cash is left over from them just running the company. And in Arabic fashion, they go from right to left. So they started out at a $1.7 billion profit, and they ended Q4 2023, so that's December, at $1.6 billion of loss. Our spreadsheet doesn't show that. So when we're picking stocks out, I want people to understand that the spreadsheet's just one facet of this. This isn't the only thing that we do. And if you're curious about what we dig into a little bit more, you can see some of our previous videos that we did. Ford is one that was the most recent one that we covered.
Right. And keep in mind, we use 8 or 9 metrics on our spreadsheet just to see if a stock is interesting enough to delve further into it. So we preach a lot of don't just use 1 or 2 metrics to help you get a stock purchase or something that you want to look at. You got to take it and deep dive. And we really look for deep value stocks that's going to pay us over time for a long time.
When they're on fire. We want them on fire.
I think the spreadsheet's a good place to say this is kind of like, are we interested in even looking further into this? I mean, that's what you were mentioning, Brian, right? And but as we delve into the numbers here, there's a definite downward trend with the operating revenue, et cetera.
And Anelli Capital is another one that's been really fascinating, because when you look at what happened to their reverse stock split, what they were trading at a few years ago, what their liquidity is based on all their asset sales that they've done recently, the spreadsheet can't tell you those stories. They're not telling you when the Fed raises their rates how it affects REITs and people being able to just pay their rent.
Right.
Look at MPW and what's happening with them with their rent. And Anelli Capital is an REIT, and they're affected in a similar way. But spreadsheets and single metrics like EPS and EBIT and all of the PE ratios, they don't tell those stories. So one thing I want people to understand is when we tell you the stocks that we purchased this month, there's more to it than the numbers, because when you look at the ones that we bought, you're going to go, what? Why that one?
And we're doing all this on boring stocks. We don't even go for the sensational stocks. This is all boring, common ground stocks that we use.
So with that, speaking of quote unquote boring stocks, with all of this difficulty of choosing additional stocks, which ones did we choose for this month?
Well, we went into our portfolio and picked Intel as one that we already owned.
Yep.
And we went with a viewer choice, American States Water Company, for our second one.
Yeah, and this was a spur of the moment for Intel. No, I'm kidding. So for Intel, this one was a much more researched stock. Going back to our portfolio, you look at Intel Corp, you can notice our cost basis for that one is just about $3,000. Now, why did we move that to $3,000? Well, before they were at $400 and they were kind of underweight in our portfolio. They had also, earlier in the year, they were up 50%. So we were actually looking at selling them for a profit. We didn't. So we had to leverage out our portfolio. We want to try to see the weight of each stock not be too much more than the other stocks in the portfolio. So for Intel, it made sense that the stock had dropped 30% this year, and then last week some more negative news on their earnings came out and they dropped another 10%. I'm like, oh God, everything just went on sale.
Right.
The thing that they're not covering in this earnings report is if you look at their overall operating net revenue, it went up. So they came out with Q1 statement. It showed that things weren't quite what investors expected. They dropped 10%, but what the people aren't looking at is not necessarily all the right numbers. So we bought it based on the fact that their quarterly operating revenue looks like it has turned a corner, and this is without of their gigafactories in Pennsylvania producing yet. So their overall business model still looked pretty good, and as far as a weight in our portfolio, we just wanted to balance our portfolio with the other stocks that we have in it while also producing some income. So when you see their total revenue, that is an increase over the previous 5 quarters. Now, the last quarter, Q4, also shows a drop. That's why the stock dropped, but we feel that's been priced in already.
And that brings us to the oddity of this month's pick, the American States Water Company. So this one was interesting. Why don't you tell a bit of why this one was so interesting?
I think the interesting part is this is one we probably wouldn't have looked at if it wasn't for a viewer, because it's a small cap company. It's $2 billion in market cap. So we generally like companies that are a little bit larger, a little bit more robust. So yeah, this is one that probably would have gone under our radar had a viewer not said anything.
I bought it because I'm afraid of the apocalypse.
He is.
And they sell like electricity and water
yeah,
and things like you kind of need water.
And waste filtration.
Yeah, well, I mean, people could just go outside. They don't have to.
That worked in the Middle Ages, right? There was no disease then.
They need the waste filtration.
So this is a small company, which is very unlike what I typically buy. Typically, I buy mid to large cap stocks, and we both leverage that way in our own portfolios. But this is one that's a utility company that when you looked on our spreadsheet, everything looked pretty good. All the numbers looked great. This was a viewer recommendation, and we just said, okay, this, from a standpoint of a business that needs to make money and you're just looking at the numbers, their numbers look great. I mean, they're profitable, they have net revenue increases, their liabilities are in line with their assets. Everything as far as the company's financials looked very sound. However, we only purchased $560 worth. Why? Well, because even if I'm an apocalypse, I'm not really a fan, I don't want to go through the apocalypse, but even if I'm terrified of the apocalypse, I want to understand more about the business before we add more into that company. So if you look at our portfolio, and you look at where American States Water is, you'll see that they only have 1.3% of weight in the portfolio. Why is that? Well, we need to know more about where their source of fresh water and all the things that make them money come from. We need to know more about the business. Once we do that, you'll probably see us add more to the stock.
I looked and looked and looked and tried to find exactly what river and lakes sources that they're using, what groundwater they're using. The only thing I could find so far is the distribution versus surface water or groundwater, which is actually heavily weighted towards groundwater over surface, which I thought it would have been the other way around.
You mean it's not because I said, hey, go find a 150-page report and read it tomorrow?
This is a long report, which I had to go through. The other interesting fact is that they are made up of 3 separate companies. The American States Water Company is the parent company to the Golden State Water Company, Bear Valley Electric, and American States Utility. The other part of this is they are not just California. They're Virginia, Texas, Missouri, Arizona. So they're spread out throughout the United States, and they're growing, as well as military bases.
Yeah, their contracts are with folks that aren't going anywhere anytime soon.
So they're a growing company. You can see where they're based out of, locations.
Yep. And like I said before, we normally don't weigh ourselves into micro and small cap companies because they tend to be very volatile, but this one, it's a utility company.
Right.
How volatile is a utility company going to be?
You have to have electricity and water.
This is where I'm expecting a big Enron thing to show up in front of the screen. But as far as our stock purchase this month, we bought that, which did bring our portfolio up to about $128 a month of passive income. We don't have to do anything for that money, except for let the money plant the seed, let the money work for us, and off we go.
I feel like this is a good point to mention, as one of the stocks we literally bought this month was from a viewer recommendation. If there are any stocks rewatching this that you want us to take a look at, go ahead and put them in the comments. And if we're able to, we can't promise, of course, but if we're able to, we're going to give it a look and potentially talk about it in a future video. So until then, make sure you stay subscribed, and we'll see you next video.